Good day, all. Ira Epstein of Linn and Associates on a pretty wild metals trading day today, and this is your weekend edition of metals, and this is for June 14th, Friday, 2019. Now remember, we're going to take a look at a monthly chart, and then all the other charts are going to be weekly charts because I'm trying to give you the bigger picture. You know about Iran by now. If you don't, I'm surprised. And you know that the U.S. is accusing Iran of being behind in some manner. The attack on tankers in May, and now the attack now in it. And, of course, the two sides are getting nasty about things. That's one thing that we have going on. We have the FOMC meeting coming up this week and the week after this coming week. In the last week of June, we then have, it's hard to believe the last week of June, but that's coming up, the G20 meeting that is super important because we'll find out if Presidents Trump and Xi of China can get together and get negotiations back on track, or if they've dug their heels in so much that this just isn't the time and President Xi maybe makes a decision to see, let's see how the president does running up to the election as these economies weaken. Now, are we weakening in America? On a relative basis, no, compared to the other economies, but yes for ourselves. Because if you look at some of the data, it's starting to slow. Interest rates have been falling rather dramatically, and that's brought people into the gold market because they are nervous about what is going on between the geopolitical, between the FOMC, and the world slowdown that they're seeing. The U.S. is still the best house on the block, and that's something to remember at this point. But gold went from 1362.20 today down, and down hard, back to 1344.50, and silver went from 1502 and fell about 30 cents. So when you look at the chart, you get an idea what's run into them. On a monthly basis, I have been pointing out how sideways we've been going. Now, each time we have hit in the past, recent, and I'm talking recent past, this is 2018, you just got up again, 2019, to this number, 1350.90, which is the 100-month moving average of closes, and that's been a resistance point. You got up this week to 1355.40, and you finished off at 1340, so you backed away from it again. I'm not saying the market can't bust through it. I am saying that's the current resistance. When you come to an area chart of only closes, this is stellar performance. You got up this week, and yes, you were down on gold for the week, $1.10. Last week, the market was up $35. You didn't give very much of that up. So the bulls have to be very pleased with that. When you come to the weekly bar chart, you can see how the market's broken out to the upside. The swing line has higher lows, higher highs. That's bullish. The market is trading over the 18-week moving average of closes, which is over the 100-week, which is over in succession the 200-week. That's called a bullish setup on moving averages. Where could resistance be coming in? I contend it's the upper Bollinger Band. Last week, the market closed over that band. 95% of the time, the market will trade within Bollinger Bands. But you're always looking to see, is the market doing that on a basis of running like it did here or coming out of sideways action, because that's where you learn how to play with them. And now what the market did this week is it pulled back under it. So the market's not excessive. You've got a bull market that's hit some upside targets running against the upper Bollinger Band. Momentum is pointing up. Bias up, because you're over the 18-week average. Trend up, the swing line. You've hit upside targets, and you're in a stall area. And if you saw my gold report 2 weeks ago, and it's not on my website anymore, we only put them up for 5 days at a time. It's not a history lesson. I was saying that we had a first price count. Those of you that looked at it, you're in that area. That's what's stalling the market. When you come to the weekly bar chart of GLD, the popular ETF, it's acting just like the futures. The market got up last week. Let's see if I can get this to work with us. It should now. There you go. You had your breakout last week over the upper Bollinger Band. This week you pull back and you finish off the week down 3 at 126.56, which is just under this upper Bollinger Band. So just like the futures, the uptrend, the bias up, and the weekly charts, I don't look at overbought or oversold. I look as momentum pointing up, sideways, or down. When I come to GDX, What you typically get in a bull market in gold is the miners will lead the market. That's one of the elements, and it's happening. If you looked at the Canadian stock market, the miners have been going pretty strong. You've got the higher lows, the higher highs. The first target's the upper Bollinger Band, and you haven't hit that since back in, what was that, end of February, right in that time zone. So a nice rally that we're getting. Support, you had a bullish crossover on this chart. See if I can get this to work with me. Here we go. You had the 18 under, over, then it slips back. If you take a look at it, if I'm correct, well, it didn't, it just hit it, and it stayed up. You've got your bullish crossover that happened back over here, and this market is now paying attention to it. But what I didn't like is normally when you get a bullish crossover, which means the short-term average in red's over the green, prices are under it. It happened when the market with prices under, rather over it, not under. That's a problem. So I watch it to just see how far this market might go, and we'll see. But I think you're knocking on the door of the first major resistance area. The gold-silver ratio is a bull, somebody that's been around in bullish markets. You like to see the other metals join in the parade. You're not getting it. This is getting up to historic numbers of silver, how many ounces you need to get an ounce of gold. Right now it's 90.53 ounces to get 1 ounce of gold. When you look at silver, you see that it's run in now twice to the 18-week average. For those of you that get my morning subscriber video on the rally, you know this morning, as garbled as some of the volume was at the beginning until I got to it later, I was very clear in saying, watch out, this is where silver's got problems. On the daily chart, ended up down 30 cents from that area, the key averages. And you can see this market ran into real problems, back down to 1480, the 18-week average 1504, the week's high was 1512, so gives you an idea what you were running into. Copper, if the US and China can't get together and can't end these trade wars, the question that you have to ask yourself is, what's the value of copper? Now, copper has value from China that consumes about 50% of the world's supply. If it turns its infrastructure on, which it says it's going to do, and if the trade situation makes them turn inward, which they say has already happened, and they're going to buy more for their roads, to build whatever, electric grids. So copper has a use, but because they're not doing all this trade with the U.S., and because what could happen here is that we put on tariffs on another $325 billion of goods. I doubt that that's friendly to the copper market. Doesn't mean I'm right, but that's what traders are thinking. In the meantime, it's been a vertical price decline. You've gone from this roughly $299.50 area all the way down to $259, $260, and you're getting just a pause in it. Hasn't shown any sign of a real bounce. In the platinum market, lower highs, lower lows. Still very much in the bear camp. Momentum still pointing down, bias down. Palladium market. On the daily chart, I've pointed out an awful lot, and now on the weekly, I can do the same. This market was in a corrective mode. And remember, this market came from way back here under $1,000. It almost doubled in price, to be honest. You got up to, what is this here, nearly $1,600 an ounce. We've had about a 35–40% correction in prices, and all of a sudden the market's come alive again. One of the problems here is supplies. There's just only a couple of sources in the world you can get this from, Africa and Russia, and that becomes problematic. So the market still very much under a guise of a correction and now trying to get back its legs under it. Last, the dollar index. And the dollar index has had trouble over and over against this upper Bollinger Band. If we come here on the week of May 24th, it sounds far ago, it isn't. You ran up to the band, you started backing off, you backed off to the 18-week average, didn't follow through, and now with today, you're just stuck in this sideways action. Traders are obviously concerned about world events. The dollar's the strongest of the world economies right now. Well, the U.S. is, and our currency is the strongest right now. So you put it all together and you can see what they're doing, but are we trending? You're whipping back and forth here. You're unable to get anything going over these Bollinger Bands so far. Could it happen? Of course it could happen. Is it happening? No, that's the difference. The momentum of the market trying to stabilize, bias up, but not a trend, as I call it. You know, one of the things that I do that I think you'd love is in the morning, my morning subscriber video. Now let me explain how this works. I try to start recording between 6 and 6:15 a.m. Central Daylight Time. 7:15, as you know, in the New York time zone, the Eastern time zone. And I do that because most of the government reports don't start coming out of importance, I'm talking the American ones, until 7:30 a.m. and I try to get you set for what's going. Instead of me standing in front of this video, which you wouldn't want to see me, I could be in a bathrobe or whatever, I record in a studio I have in my house, and the charts look very much like this. I will record in this exact sequence. You can pull the recorder button and it lights up and tells you if you're in stock indices, foreign currencies, just put your cursor over it, it will light up. And you also have a lexicon on the side of the chart so you can click any area that you want to go to. I'm going to cover 40 futures market charts, and I typically cover 5 ETFs. The difference between those videos and these, I can say, buy here, sell there, do this. This is what I think you do. This is what I think the pros are doing. This has got so-and-so happening. I can't do that in these videos that get to the public. I can talk to general what the market's doing. You will not find me saying you should buy here, you should sell there. I'm going to talk what I see in the market, where some support and resistance points in theory are. Difference is a lot of traders want that specific idea because you're sitting there scratching your chin or thinking, gee, I want to be a buyer of gold or other. What is Ira saying? Well, if you're watching these videos over and over, you're probably going to like the others. Some people like these general videos. I appreciate it, love it. This is a lot more information meant for those of you trading, putting risk out there each day. How do you get it? It's simple. It's a subscription. If you haven't tried it, $7.95, 26.5 cents a day for the first 30 days. There's no contract. If you want to continue 30 days thereafter, it's $15, or you can buy a 1-year subscription for $156, which is $13 upfront a month, and that's another price break. Why don't you go to our website, take a look, and you'll find out about it. It's under the words education or research. Ira's morning subscriber video. You have a good weekend. I'll see you on Monday.